Welcome traders to yet another educational video of Nifty Short Term View, episode number 10. What we can look that prices are down and the trend is also down. In the daily chart, we can see prices are below both of the moving averages, and the same condition is evident in the hourly chart as well. Now, if you look properly at the daily chart, what we can see over here, this is the resistance band, I think, which is consistently providing resistance to the Nifty futures since many days. This rally which happened over here, first of all, it did happen on the back of a very small increment in volumes. I'll just plot the volume over here so you people can understand properly. You can see the volumes were coming down. And this was my main concern, that even if this pullback is happening, the volumes were consistently coming down. All right. And from the same resistance, you can see this is a bearish engulfing pattern. This combination of these two candles is a bearish engulfing pattern which is being made at a resistance band. And from that band, prices have come down. In the daily chart, you can see, yes, overall trend seems to be down. But in the hourly chart, if you look properly, especially to the shape of the RSI, generally when prices come down with momentum, you can see over here, you can see how fluently RSI is able to come down. Over here, there is some sort of, like RSI is trying to, resist coming down. Why? The reason for that is that price is not able to sustain or close below 17,220 in hourly charts. I think if this particular level will be taken off, and decisively, it's not just that the prices plunge down and then again it comes back and closes higher. That should not happen. Once the hourly chart candle closes below and then consistently selling is evident in the market, then possibly we'll be able to see markets going towards 17,100 and possibly the support band. Once again, it will start somewhere over here, which is the gap. You can see in the hourly chart there was a gap up. So this gap, and you can see in the daily chart, the same level is at 17,025. So this particular level, 17,220, is a very, very important short-term support as of now. You should not forget that. Even over here, I'll again plot the volume. In fact, in hourly charts, it will be visible even more clearly. If you can see over here, this is the rally which was happening. You can see consistently volume is coming down. I'll just plot a trend line over here. You can see the trend line is slanting down. The volume is dropping, price is rising. So this is a negative divergence between price and volume. And when market started coming down, the volume spiked. So this is not a good sign. But if market wants to come down, it will have to show some sort of strong momentum on the downside. If you look at the 15-minute chart, the market is coming down. Again, it is bouncing back. Again, we can see somewhere over here at 10:30 or something, market went down, traded below 17,220 levels, and suddenly it gave an intraday pullback. Again, it came down. Again, it went up. So basically, this particular level of 17,220 Nifty futures is a short-term support. This should be cracked on an hourly closing basis. Only then we'll be able to see lower levels. If you look at the Bank Nifty chart, just like the Nifty futures, after the bounce back, what has happened over here, we saw the resistance band started working in the Nifty futures. Same thing is happening over here. Plus one more thing, you can see that I have plotted the volume profile indicator over here. This POC, the point of control line, is providing strong resistance to the price. Currently, the trend is flat in the daily time frame, and in the hourly time frame, you can see the trend has started coming down. And especially if you look at this particular candle hammer, why the prices went down and again it gave a pullback is due to this particular support. There is a gap over here and there is a Fibonacci extension over here, and you can already see, if you check the 15-minute chart properly, you can see some sort of downside momentum has started. Yes, this is encouraging for the bears, for people who are trying to sell the market. And if you see properly, this particular short-term resistance, if I remove this Fibonacci extension for you, you can see this particular selling is coming through a very strong resistance band for the Bank Nifty futures. So yes, if this sell-off continues and if sustains below this particular level, which is 36,650, and mind you that this should happen consistently. It should not happen that the prices did test 36,650 and suddenly there was a bounce back. It has to close below it, sustain below it for a couple of hours, and consistent downside momentum should happen. Because if you see, even over here, RSI is resisting to come down. When there is a strong momentum, RSI comes down very strongly. But over here, things are a bit different. So if this sort of activity goes on, I think it will be difficult to determine whether the markets are trying to come down or they're trying to stay afloat and they're trying to stay higher. So this level needs to be taken off. And once again, I think all of you can understand overall market. If you see the overall picture, okay, the overall picture, if you see, it's very, very choppy. It's very, very dull. So again, I would like to share with all of you the same thing which I am telling consistently over last few days. Kindly trade as less as possible. If you find a particular stock, if you find a trade in that stock, whether it is long, whether it is short, please go and check the index of that particular stock, whether the index is showing positivity or negativity. If it is showing negative, then again go and cross check the other stocks in the same index. Are other stocks also showing some negative reading on the chart? If the answer is yes, then you answer the question that the stock which you're trying to short, is it the worst performing stock of that particular index or not? If the answer is no, avoid trading. Because I think even if you have avoided trading in last few days, I think you have made yourself a lot of money. Because there was a tweet I had tweeted just before a couple of days that, can you make money in range bound market? And I said, yes, you can. How? Just by trading less. Because money not lost is money earned. Money saved is money earned. Same logic is same logic is applicable even over here. So be very, very careful. And once again, I'll just repeat this level. This particular level, 17,220, needs to be taken off on hourly closing basis. Again in the second hour, consistent selling should happen. Only then we'll be able to see the lower levels. Lower levels are 17,100, and if that is also taken off, then the next support will be probably somewhere around 17,026. All right. So I hope this video helps you to understand the state of trend of Nifty futures. Share it with other people, share it with other traders who would find this video very, very helpful to understand how markets are going to react in next few days. Till then, trade less and trade wisely. Thank you.